morning, welcome to IG's early morning call. It's Friday, 7th of July, and the markets are taking a tumble. We got volatility up. It's definitely a case of risk off. Let's take a look at the headlines as we go into the start of today's trade for the European session. We're seeing indices slump across the board. There is a little bit of buying interest at some of the recent bottoms in some of these markets, but the bottom line is that the interest rate reality is bitten. We've got basically good news is winding its way into the markets as bad news, as we see good economic data coming through, proving that central banks still have more upside to go in terms of interest rate rises. Now, we got more economic data today with the non-farm payrolls at 1:30 p.m. UK time today. We will be live on the IG platform for that, and we'll be trading the markets around that. And we are expecting that number to confirm the robust growth we saw yesterday in the ADP figure, which absolutely busted the top line in terms of job creation in the US economy. That being said, some of the corporates are finding they're going tough, not necessarily on earnings. We saw second quarter numbers out late last night from Levi Strauss. The stock ended down 6%. It wasn't because of earnings, it was because of the outlook that the company is suffering. And we'll see more on that in just a couple of minutes' time. Let's take a look at volatility as we see the start of today's trade. Yesterday, really big spike up actually to levels there not seen since Friday, 2nd of June. But in fact, as of the high point yesterday, we still weren't even as high as the 20, which is what I regard as an area of the market. And I think generally speaking, we regard as an area of the market, if you get above 20, it's good for traders because it means the volatility is there for us to get that disturbance in the market so we can get a bite on trading. We were actually at the high point yesterday. You can see here at 1831. So we're still a point or so shy of that 20 level. But you can see clearly the way in which we saw volatility spike yesterday. And as of the close yesterday, we're holding on to that level at 1689. And this has made itself felt across the board in terms of some of these equity markets. Yesterday, we saw the low point hit the intraday lows that we saw back in March this year. And in fact, if you look at the close last night, we were the lowest close on the equity markets last night seen since the 3rd of November last year. So we've wiped out all the positivity we saw at the beginning of at the beginning of the year on the year to date. And the market's on the way down. And in fact, you can see at the moment as well, we've got a red candle on the 24-hour markets. IG showing that we are expecting a further drop at the start of today's session. And it doesn't stop there either. Germany yesterday. I was talking about this total retracement of this market. And in fact, as of yesterday's open, we were looking at a support here at the 76.4% level at 15,817. We were talking about a short trade going into the markets yesterday. And if you held those positions out and you rode this market on the way down on a short trade, you'll now be sitting on a big profit. As of yesterday's intraday lows on the DAX, we were the lowest point we've seen since the 6th of April this year. So that fib has now been wiped out. What I'm going to do is I'm going to take that fib now down to this level down here. In fact, I'm going to get rid of that blue box there because that's going to cause a little bit of a problem. Now, so what I've done is I've drawn another fib on here from the lows we had back on the 20th of March to the swing high on the 16th of June this year. And we are now, let me just pull that back down a little bit. There we go. So we've got a support line here at 15,211. 15,549 is where we are. And I think there's potentially further downside to go. Technically, this is the line of support to watch out for, the 61.8%. So if you retain your short position, that's now your price target on this market. We don't have the same sort of build-up on the 24-hour markets on the way down we've got in London. In fact, we've got a green candle at the moment on the German DAX. We are up 0.05% on the 24-hour markets. But I think that belies the situation. And in fact, I think that clouds the situation, I should say, potentially. We are looking now for the NFPs to give us some sort of direction, but that doesn't happen until 1:30 this afternoon. So at the moment, traders should hold their nerve. And in fact, what you do in a situation like this, if you still hold those short positions, you're looking for an area to bring your stop loss in from. The stop, so I was talking about yesterday, above the moving averages, you want to bring your stop loss in so you lock in those profits that you've got. And you can see on this hourly chart, since the lows we had at 3 o'clock yesterday afternoon, we are looking now potentially, possibly actually, for a small number of points up at the start of today's trade on the German DAX. But it is only fractional gains in what is, at the moment at least, a market which is really moving fast. And as of yesterday's close, as I say, that was, I think, one of the biggest candles on the way down that we've seen since the 13th of March on the German DAX. Same sort of price action on the French markets. we got this move down. But in fact, you can see here, let me just expand this out here. That's the MACD. There we go. You can see the drop we saw yesterday coming down to this line of support I was talking about, which is the low point we had back on the 31st of May at that 70,83 level. We're trading at 7,100. So like the German markets, we are up a tiny touch on from the close of yesterday's session, and the markets looking for this total retracement. Remember I was saying yesterday about the market dropping below this line of support, which would make me turn around and then look for short positions. And I was talking yesterday about the MACD, and it hadn't at that point dropped below the red line. It has done now subsequently, and the markets are now picking up again on the downside. So momentum is picking up on the downside, and I suspect we could well end up seeing some further lower lows, certainly if we do get a strong NFP number out a little bit later on today. Let me just look at the longer term picture and sort out where we go from here. Because if you're looking at further support and you're on a short trade, your next line, your next price target will be the lows that we had here down on the 20th of March this year at 6,777. 6777, a nice number to watch out for. We'll be covering that in the early morning call throughout next week. The markets, if we get a candle close below the 70.83, that's where we're on the way down to. When we see these markets pull back further, as indeed I'm sure they probably will. Certainly if we get more indications that the Fed is going to keep its foot on the pedal so far as interest rate rises are concerned. Let's take a look at what's been happening overnight in the Asia Pacific markets, just to quickly run through some of the numbers that we've got. Big declines in the Australian markets as at the close of the session in today's trade. Let me bring up the Australian benchmark. You can see here the drop that we saw yesterday and today. And in fact, this is always what happens when you get these markets doing what they're doing. It's difficult to work out what is yesterday and what is today, because these are 24-hour markets. And of course, IG takes the day as being midnight UK time. So we've got a little bit of yesterday's trade in the session today. So these are the declines we've had. Whichever way you cut it, we're below the line of support at 70.47, which is a 61.8% retracement of this fib. Again, going back to the start here, 20th of March, the high point we had in there at 7,400 back on the 17th of April. This pullback brings out a new dimension to trade, and I think we've got further declines to come. Today, we've seen the Australian 10-year yield up at 9-year highs, levels not seen since 2014. Next week, so far as some of the Antipodean markets are concerned, we've got the Reserve Bank of New Zealand out on interest rates next week. Markets are widely pricing in no move, but, well, see what happens. That's going to be one of the risk events to watch out for next week. Let me just take a look as well as what's been happening in Hong Kong, because the Hong Kong 50, as it's called on the IG platform, has been down heavily this week. In fact, on the 24-hour markets, we now have got a green candle. But I think it's worth looking at one of the stocks moving in this market today, and that is Alibaba. Alibaba trades in the States as an all-session stock, and it also trades in Hong Kong. The stock was up at one point today more than 6%. In fact, it was even higher than the 200-day moving average. That's the first time we've seen that in the last couple of weeks. But it has seen a pullback since then. Stock up 3.68% today. China's expected to announce a fine of more than 8 billion yuan, or $1.1 billion, on Ant Group today, which brings to an end the broader crackdown on the Chinese internet industry, which has been wiping hundreds of billions of dollars off the value of the sector. You can see the way in which Alibaba here. This is the Hong Kong markets. It opens at 9 o'clock this morning, all sessions on the IG platform. And this could well be an interesting stock to watch out for when trade does get underway. The ticker symbol is BABA. And if we see all sessions increases like we've seen today in Hong Kong, this stock will open at 9 o'clock this morning, all sessions on the IG platform. This is the US stock. If we're looking at something like about 5 or 6% gains at 83.67, you can work it out yourself as to where we go. But certainly at 9 o'clock this morning, this is definitely going to be one of the stocks I'm going to be watching on the trading platform to see whether or not we're going to get a bite on the upside. If you are long on this, your stop goes below the deep candle low yesterday. So you'll stop at around about the $82 level. 83.67 is where we are. Add something like around about 5 or 6% on the top of this, and that's where you get your profit after this news overnight that the Chinese authorities have put this fine on Ant Group. As I said, it brings to an end this crackdown on the Chinese internet industry. And analysts are saying it allows the fintech giant to resume business growth that might help Beijing finally move away from that dark period of where it wanted to try and limit the operations of these big internet companies. And of course, Jack Ma was one of the big casualties of all this, having built up Alibaba and Ant Group into two of the biggest companies in the sector. That being said, talking just recently to one fund manager who says that even the top 10 internet companies in China are not worth as much as Amazon. And when you think that China has 1.4 billion people, the potential for this sector is enormous. And the Chinese authorities wanted to make sure, according to internal reports, they wanted to make sure that they were lining up everything correctly for the future of the internet. Whether or not you believe that, or whether or not you believe the outlook for this sector, I think today could well see a little bit of an uptick in the shares of Alibaba. Watch out for that. All sessions on the IT platform at the start of today's trade. Let's move on to US markets and take a look at what's been happening there. As of the close yesterday, we saw declines across the board. As we've been monitoring what's been happening on the tech-heavy NASDAQ, I want to show you this chart first of all. This was one of the better performers on Wall Street yesterday. We are currently trading on a red candle on the 24-hour markets at 15,069. At the moment, at least, looking as though we could well end up seeing a little bit of a loss at the start of today's trade. But there's a lot of water to pass under the bridge before then, because we've got the non-farm payrolls, which I'll cover in just a minute, at 1:30, an hour before Wall Street gets underway. I want to show you what's been happening with the Dow, because that was the one where we saw the biggest declines yesterday. 24-hour markets picking up again on the downside. Not quite as deep as we were at the low point of the candle yesterday for the Dow. We did see a recovery late in the session yesterday, which I think is another reason why some of these markets in Europe might see a little bit of an uptick at the beginning of today's trade. But the downdraft, very much in evidence. Although that being said, as of the low point yesterday, we didn't get to a new lower low. Instead of that, we have seen a slightly higher print than we saw back on the 26th of June. That gives me some hope that the markets are going to hold up. As I said at the top, this is essentially good news for the economy. They're creating jobs. They are seeing activity. PMI data is not as bad as some other areas of the world. The problem is with that is the Fed's got to raise interest rates again, because it still hasn't got on top of inflation. And that is the reason as to why there's been this sort of jittery market in the last 18 hours or so. But I think some of that could all be unwound when we get the non-farm payroll data through at 1:30 p.m. today. Now, before then, let me just quickly update you on another bit of economic data that's coming through. And this is about what's happening here in the UK with house prices. We have the Halifax House Price Index showing a yearly drop of 2.6%. But the June number falling after we saw May flat. June has come through with a month-on-month number of 0.1%. I want to show you the household goods and home construction company. This is the index, the FTSE 350 index, where the stocks like Persimmon, like Barratt Developments, like Redrow, all trade. Yesterday, we saw this gap down to 95.34, showing us that these big house builders were having trouble. There's no doubt about it. There's going to be more interest rate rises here in the UK. And the bad news yesterday was that the markets are now pricing in 150 basis points more from where we are at 5%, base lending at 5% after that 0.5% increase the last time the Bank of England came out. And we got another 150 basis points on the upside, according to that statement out yesterday. And I was talking yesterday to a brick manufacturer. This is Barratt Developments, just for example, just to show you what's happening with Barratt amongst other house builders. Yesterday, we saw Barratt hit lows not seen since the 4th of January. Talking to a brick manufacturer, a retailer and supplier yesterday, and he was saying that he was getting something like around about 4 or 5 quotes and orders per week from architects on building works up until 3 or 4 months ago. This month, in the last month, he has had 1 order. And that just goes to show what's happening. Enormous increases in material costs and labor costs means that some of these rebuilds and some of the big refurbs that some people are going for are just not worth it, and they're stopping. And I think this is going to be a really big issue for the building sector over the next 6 or 8, 10, 12 months or so. And I think we could well, unfortunately, see a lot of people go out of business because there is just not the appetite for people to spend the money when you've got house prices on the way down and you've got house builders finally going tough. They've got a lot of land. And if and when Labour gets in next time around, they're going to be on the heels of these big house builders to release the land for house building. But who wants to buy when you've got mortgages at 6%? who wants to refurb when you've got house prices on the way down, when you've got prices of raw materials rising along with wages? It's just completely untenable. We are in a very dark spot so far as the building sector is concerned, I think, and this is highlighted today by house prices down 2.6%. Now let's go move on and take a look at some other areas of the market to watch out for. I've been talking about non-farm payrolls. 1:30 p.m. today could well be another seminal moment for the markets today. We're looking there for job creation to 225,000, and I'm wondering whether perhaps maybe the risk on this number is now for upside. The unemployment rate 3.6%, average hourly earnings 0.3% month on month, 4.2% year on year. The good news is that is still under the inflation rate in the States, which means that there is still hopes that perhaps maybe we're going to get a wage price spiral. But this data coming today after a very strong ADP yesterday for June. We've been looking for 160,000 jobs having been created in the private payroll sector. We got 497,000. That is a number that beat on pretty much every single person's metric. So if we get anything like the sort of increase from the 225, I'll be looking for something like around about 400,000. I'll be with Axel Rudolph at 1:25 today on the IG platform, looking ahead to those numbers out at 1:30, and he'll be taking a look at some of the areas of the market to watch out for, including this chart here, which is the euro-dollar chart, and this is what Axel will doubtless be looking at today. Yesterday we saw an uptick in the euro over the US dollar, which was interesting, bearing in mind we had that news of that very robust ADP number. That being said, yesterday we got a 2-week low intraday print for the euro, which means a stronger dollar, but we ended up the day on the upside for the euro against that weaker US dollar, and that's where we're holding today at 108.92. And the US dollar was seen falling against a number of other currencies as well. This is sterling on the way up against the US dollar. One chart I didn't show you earlier on in the webinar just now was this chart, which is the Aussie against the US dollar. Aussie up today after that Aussie 10-year yield rising to what was it, the highest since 2014, indicating there's more interest rate rises to come in the Australian economy as well. But we are awaiting, all these crosses are awaiting that non-farm payroll data out at 1:30 today. Staying on the charts, just wanted to update you as well on what's happening with the yen. We've been talking a lot about this recently with the rises that we've seen recently for the dollar against the Japanese yen, the euro against the yen, the sterling against the yen, the Aussie, Canadian. Yen's been shrinking against all these currencies. Over the last couple of days, we've been hearing about talks between the finance ministry in Japan and Washington and other central banks. And there's some speculation that we will end up seeing the Japanese authorities stepping in. That seems to have been enough to have reversed some of the gains we saw in the dollar against that weaker yen in the last couple of days. And we're now trading down at 2-week lows pretty much on the dollar yen trade at 143.38. Still not a really big move. And at the moment, at least, I think that's not necessarily going to help us in terms of trading to get a firm direction, because until we get that word from the officials that they are going to start buying yen to try and support it, I don't think there's going to be much move in that market. Late on Thursday night, we saw a slump of around about 6% on the share price of Levi Strauss, the denim maker. It's cut its profit outlook drastically after the company reported a steep drop-off in wholesale revenues and soft sales in the US, its largest market. Let's take a look at the figures as we saw them released late last night. Earnings per share 4 cents adjusted versus 3 cents expected. Revenues coming at 134 billion against expectations of around about that sort of figure. I want to show you the chart here, it's not an all session stock, but we did see a drop, a pullback on that by a margin of 6% because of the outlook. That's what caused the alarm. Levi now expects adjusted earnings per share of $1.10 to $1.20 compared to a previous range of $1.30 to $1.40. There were some bright spots, however, in its direct-to-consumer sales and the Chinese market, where robust demand has still kept through. But as I said, shares down in extended trade last night, and the stock is likely to drop to around about the 1350 level at the start of today's trade at 2:30 this afternoon. Now let's move on and take a look at other areas of the market. We saw the EIA report its weekly inventories yesterday coming through with a bigger than expected drop. The draw did see another rise in the price of oil. This is WTI that we've got here, escaping the boundaries we put in here on this falling line of resistance. It did actually end up and closed up above that on Wednesday, but it's now been holding above that. We've got an entire candle now above that falling line of resistance, which has now become support. Crude oil inventories falling by 1.5 million barrels last week compared with analyst expectations. In a Reuters poll for a drop of 1 million, that means that there's less oil in the market, which tightens the supply, which means that prices do rise. Last week's Baker Hughes rig count saw one rig taken offline. Number of oil rigs falling to 545. Total rig count falling by 5, including gas rigs, down to 682. Excuse me. Let me just quickly end up with one more chart, just to show you what's happening with the price of gold. Gold price is seen supported at this fib line of 1910. Over the last couple of weeks, we've been talking about a drop below that line, but broadly speaking, that 1910 is held, and that continues to be the case. A little bit of a bounce off there today. But my price target still remains the 1804.9 level. I want to see more of these shorts taken out of the market with further declines. And I think when we get the shorts taken out, anything below the 200 period moving average could well see a possible bounce. But price target at the moment is 1804 for me on this with a short trade with a stop above where we are. That's it. As I said, I'll be back at 125 today with Axel with a look at non-farm payrolls. Before then, Axel will be on board at 10:30 with charting the markets. That's it. Look out for house builders to start today's trade as you see more pressure building in that.